Welcome, everyone. And again, this is a call I've been building up to for a while. This is the Friday Senior Supplemental Extended Care, Long-Term Care Solutions Friday call. You're looking at our mission statement. North American and FPS joined forces about 9 months ago now, and we're determined to build the most impressive supplemental channel for both the clients as well as the agents who or the specialists who choose to practice here. Our job is to help you succeed in the building of your business to whatever extent that takes. As long as it's not illegal or immoral, you can count on us to be right behind you or right with you side by side, making that into a reality. All right, so let's talk about what we're going to talk about today. We have two different presenters today, both with interesting themes. First and foremost will be Kelly Rayburn, who you just saw, who was in the waiting room for a long time for reasons I can't explain, from Wellabe. I've been around this business a long time, and Kelly is one of the hardest working people I've seen in the space, but more importantly, she's working toward the things that make you and the agent she works with more successful. So it's one thing to work hard, it's another thing to work smart and hard, and she does them both. So you'll be hearing from her about some exciting lead programs and some things that you need to know about the Wellabe portfolio. Again, when it comes to extended care, the products that Wellabe offers are the elite in the business in the sense that they will offer to pay more money than any other extended care carrier out there. And you get Kelly. So we're going to talk a little bit about that in the beginning part of our call. And then I'm going to have the one and only Mr. Claude Thau come on and talk about a concept he and I have been working on since the conference, and that is bundling Medicare with life insurance, or just starting to enter more life insurance into your practice of product offerings. We've discovered some pretty substantial things when we were looking at the placement rate of life insurance amongst the agents on this call and the agency in general. And our placement rate is more than twice that of the agency in general, and there's reasons for that. And Claude, being the analyst and actuary that he is, did some deep dive into the numbers and came up with some of the reasons, and we're going to share that with you as well. As I said, then we'll talk about some carrier updates, some leads that are available, free leads, brand new leads that are free, no cost to you, with no commission split available to you. And then I'm a little piece that I was inspired to write from watching the Olympics these last few weeks. I'm calling the 1%. And then I'll answer any questions you might have. So let's get started. First, before we do, let me just spot out, guys, I need you to tell me what you write because I can't see it in the computer until it actually places. But Lori was as always, as Lori's on this board every single week. Lori wrote a couple of Omniflex deals for $6,014 and a term life policy with Cincinnati Life for $2,172. So, Lori, thank you again for your persistency and consistency and always being on the board. And okay, Hank Ellis is not really Hank Ellis, right? I know that this is someone else. I want you to tell the world who this really is that is running. That's the name of the agency, the Hank Ellis Insurance Agency. And I know it's a woman, did 2 dental, vision, and hearing policies with an ACA plan, $1,200 in total premium. But you want to unmute and tell me who you are so I stop, keep guessing different people every time? Congratulations, by the way. Once, you want to stay secret about this? 2, come on, tell us who you are. 3, all right, I'm going to track it down. I'm going to hire a private detective agency and I'm going to figure it out. But congratulations, Hank Ellis Insurance Agency. Thank you for sharing that information. Let's get into our plan program. There is the one and only Miss Kelly Rayburn. Kelly, as I said, no matter when I try to talk to her, get in touch with her, she's somewhere on the road, somewhere helping other people. Kelly, what years were you at Conseco?
I was there from 2000 to 2003. I was actually the division of Conseco that I ran was part of Conseco Finance in Tempe, Arizona.
In Tempe, Arizona.
Mhm.
Because I was a board member at Conseco at the exact same time, and I think that's where I originally knew you from. But okay, it was the time they ended up going bankrupt, so let's not brag about that too much. But
Right.
but that was an interesting time period. When I saw that, I said, "Oh, well, that might be." Anyway, we'll catch up later on that. As I said, Kelly is everywhere all the time, constantly innovating. We're lucky to have her as be part of the team. That's the best thing about having Wellabe become part of our portfolios. We get access to Kelly because she knows everybody and she's everywhere and she sees what's working, and you can have access to her too. So Kelly has prepared a webinar for you, or a segment for you for this webinar on the Wellabe portfolio. I'm going to turn it over to you. Kelly, do you see a place where you can take control of the You do. Okay. Take control. Let's see if we can see your slide. Tell me if you see your slides, guys. Sometimes you see it before I do.
Says that I'm sharing my screen, so I'm
I
gonna.
can see it.
They can see it. All
Awesome.
right.
Oh, now you can see just you. Let me go back to that.
Yeah,
How about that? Okay.
They can see it, so that's good. All right. So now we're going back to there, and it's all yours, Kelly.
Awesome. Well, thank you. And thank you everybody for first, Mark, thank you very much for the warm welcome and introduction. You're always just about, you're my top 5 nicest people on the planet, I think, is what's.
Oh, that's so sweet.
Yeah,
I don't know.
you
I
actually
gotta meet
fall
the other
above my
4.
husband. I'm gonna say you fall above you're above my husband on this deal.
Oh my goodness.
I know, don't tell anybody. Okay, and don't tell him. So,
Okay.
hi everybody. My name's Kelly Rayburn. I am with the Medico side of Wellabe. So, just to kind of give you an idea of who Wellabe is as opposed to Medico, because some people are like, I don't know who Wellabe is, but I know who Medico is. About a year ago now, we actually rebranded our entire insurance company and mutual holdings company to the brand of Wellabe. Under the Wellabe brand, we have multiple different insurance companies. The one that you guys are familiar with is Medico. We kept our Medico name. All of our paper, all of our products are written on Medico company paper. So you can still rest assured that Medico is still around. One of the best analogies that I could give you as far as who Wellabe is opposed to its insurance companies is you can kind of think of the Coca-Cola brand. When you walk up to a Coca-Cola soda fountain, it has Coca-Cola on the top and it has Diet Coke, Coke, Coke Zero, Sprite, Fanta, whatever Coca-Cola flavor, Coca-Cola company flavor you're into. It has all of those things below it. So you can think of Wellabe as the entire soda fountain, and all of our insurance companies underneath it are those flavors. So it's a kind of an easier way to look at who Wellabe is. So I'm going to talk specifically about our short-term care today because really, this is the product I think that you guys are the most interested in, the one that is going to protect your clients and really kind of brings the whole idea of Wellabe to the table. So we do have other products, just so that you are aware. We do have Medicare supplement, hospital indemnity. We have a first day dental plan. We have a cancer plan, and then we have the short-term care plan. So today we're going to talk about the short-term care plan. Currently, we're in 24 states. Those are all the states that you see here on the screen. So our plan outside of the state of Ohio is pretty standard across the rest of the states. Not Ohio, Idaho. Idaho maxes out at a different day based on their state regulation, and we can talk about that offline if you do sell in the state of Idaho. So it's safe to say, I'm not going to really cover the statistics on the screen, but it is safe to say that each person, not only on this training today, but really across the United States, is going to have a higher than half chance that they will need some sort of extended care services in the future. 70%, as you can see, over the age of 65. And pretty much all of us work in that over 65 age group. That's mostly where we focus, right? We focus in the senior market. So this is a perfect opportunity for you to be talking to the seniors that you know or that you're working with about what their plans are for being covered under extended care. Most of the time they say, oh, well, my family will take care of me, my church will take care of me, somebody else is supposed to take care of them. And my number one question is, how do you know? Have you asked them? Is there a plan in place? Because that's not likely the case. In my case, I'm an only child, and I've told my parents for the last 30 years that I've been selling insurance, you need to have your plan figured out because your plan is not going to disrupt my life, right? So I want them to make sure that they're planning appropriately for their entire lives up from the time that they retired through the time that they plan to leave the earth or God calls them off. So, most of the time, people need less than 1 year of care. So even though our extended care plan, our short-term care plan, is built to be it's built for a lifetime restoration so that they can use it for more than 1 year. Most people only need less than 1 year of care. And typically, long-term care plans, if they get through the elimination period and they've paid for a full-size program in long-term care, is very expensive if they have a shorter elimination period. Or if they have a longer elimination period, it means they have to find the money somewhere so that they can pay for their care prior to their long-term care plan actually going into effect. And then 40% of people really need care in a facility for a year or less. So maybe they are moving from a diagnosis of a cognitive impairment where they're staying home for a period of time, and then they're moving into a facility, and then something may happen to them in that facility. Or let's say for maybe a cancer or stroke victim where they might need, they may go from the hospital and straight into a nursing or skilled facility where they might need to be able to stay there for a period of time, usually less than a year, for their rehabilitation period. So there is something to be said for less than 1 year, which is the reason why the limited long-term care model was designed in the first place. And it also was designed to be able to provide services to people sooner than later, which is the reason why it's called short-term care and not long-term care. So this is a big screen right here, right? It's like, oh, I totally get it. You look at this and you're like, what in the heck does this what does this mean for me? What this means is that you have thousands of different ways to be able to design a Wellabe short-term care plan for your clients that will fit not only their need, but also their budget. So that's the reason why this slide is entirely too busy for anybody to really look at. But I really want to focus on kind of the matrix. I'm going to walk you through it just very basic way right now. And we can, of course, I'm going to be open for questions here soon. So first and foremost, the Wellabe short-term care plan is a home health care base first. Okay, so we offer home health care first on our plan. So if your plan gets written with a base plan only, your customer is only receiving home health care benefit. And as you can see from the benefit periods, that benefit period can be between 90 days up to 360 days, depending on what the client is approved for. And that's going to be really important because our application will do all of that work for them. So we have multiple different elimination periods. We have that 0 to 20 if they are approved for the Essential Care Plus, or a 20-day elimination period if they are approved for Essential Care. If they're on the limited benefit rider, and we'll talk about that, that's the uninsurable spouse rider, their elimination period is 90 days and it's home health care base only and graded. So the home health care benefit period or benefit dollar amounts that we offer are they are ranging in many different dollar amounts depending on what your client, one, can afford, and two, wants to be covered for. So daily benefits are in $10 increments starting at $10 up to $300 a day. For the Essential Care Plus, $10 a day up to $150 a day in that Essential Care. And as you can see from the limited benefit rider, it's going to be up to $100 a day. Now, what's important to understand about our daily benefit, it is an indemnity. I'm going to keep saying that. It is indemnity, and it is not based on the service that is provided. So what that means is if your client is using home health care 1 day a week for someone to come in and help them clean their home or transfer over, or maybe they need somebody to help them shower. And then another day they're using one of those days of service for, let's say, physical therapy due to whatever their event is. We're going to pay them whatever dollar amount they have elected to have for both of those benefits, because that's considered a service that they are getting on home health care. All we need is a medical practitioner to tell us that that's what they need. So we just need a physician statement to say, yes, John Smith is inside of this qualifying event, and we're going to go, okay, that's what we needed. All right, so it does not matter what type of service that they are currently receiving to be able to get the full dollar amount. Some of the carrier competitors that are out in the market are graded based on the type of service that is rendered. So if your customer is going in or is having PT at their home, they're only going to pay a percentage of that for the customer. They're not going to pay the entire indemnity. And that to me is a big differentiator about our plan over the other plans out in market. We also have the household improvement benefit as well as the care coordination benefit, which means if your client falls inside of a qualifying event and they need to have a ramp built, they need to have doorway widened, or they need to have grab bars installed, they can get a $500 check to help them pay for those things that might need to be improved inside of their home. If they need to meet with a care coordinator to build a care plan, they will give them that $500 benefit for that care coordination meeting to be scheduled and have that built for them. So I'm also going to talk about that uninsurable spouse, that limited benefit rider. So the limited benefit rider has been designed for someone that wouldn't get benefit any other way, right? So if you guys have sold long-term care for a long time, you know that if Kelly and John Rayburn both apply for a long-term care plan, Kelly gets approved and John does not after they go through everything under the sun to try to get medically approved. John doesn't get it. No one's taking it. Okay. It's called the uninsurable spouse. If one of the people don't get it, no one's taking it. We have taken that objection off the table for you. So as long as Kelly is healthy and John is not currently inside of a qualifying event, John can actually get some sort of coverage as a limited benefit rider on Kelly's plan. So Kelly will have the essential care or the essential care plus. She'll have her own benefit. John will be able to be approved for home health care benefit on the limited benefit rider. Because in my opinion, X is always better than zero, right? I've been in multiple homes, sold lots of long-term care over the time, walked out of a home, didn't sell anything because one could not get approved. So this takes that objection off the table. Below that second red line, you can see that we have different riders that are available. The first and the one that you're going to be focusing on the most is going to be that nursing facility rider. Don't let the word nursing facility scare you, because yes, it does cover assisted living. It does cover memory care assistance. So it does cover other facilities. The one facility that it does not cover is going to be hospice. We don't cover hospice on our current plan. We had hospice on our last plan, and we had no one, and I mean 0 people that had claimed against the hospice benefit. So we just decided that we would take it off so that we could keep the price down. So as you can see, the benefit period on the nursing is 90 to that 360 days, also full restorative, just like the base plan if they recover from their qualifying event. You can see the elimination period, 0 or 20 days. You can also see the benefit periods up to $500 a day in a facility, also be broken down into that $10 increments. So it can be very specific based on their need and their budget. So we have other riders. The inflation rider and the return of premium rider are the only 2 riders on the plan that are not restorative. So the adult daycare rider is also restorative. If they use 20 visits for their adult daycare and they recover from their qualifying event, we will restore that rider back to them 1 additional time. So this entire plan can be used based on service days. both facility and home health care. Typically, if you're in a facility, you're going 7 days a week, right? But I just want to let you know that these are per service days, and it's not per service. It's not graded based on the service that they are receiving. It's the dollar amount that they've chosen in each one of these categories. It's very specific, very easy to understand. There's just a lot of information and a lot of ways that you can build this plan. So,
Hey, Kelly,
yeah.
Can I jump in for a second? Sorry.
Sure. Yep.
I have a quick question. Needing the physician's plan of care, that has to be done first before they apply for benefits, correct?
It has to be done first before they file their claim.
Before they file their claim. And does it have to be, specific services, or can it just be general?
It can be general.
And
General.
do they have to also, besides the plan of care, do they also have to then get the receipt and file the receipt in order to file for the claim?
So once we get the physician's statement, we'll ask for where the services are coming from. And so we will be able to watch that. They don't have to file the receipt because, I mean, that'd be a lot of receipts, right? So if they were using home health care, if they were using home health care 1 day a week for 360 weeks, let's say, that's 360 days of receipts. So what they're going to do, so what that physician statement will tell us is what they need. And then let's say Kelly Rayburn needs a specific type of care, and it's going to come from ABC CNA place, right? So we know that the CNA is going to be coming in. The qualifying event is going to be it's going to be estimated to last however long. So we're going to check in at that time.
But how do you know what is spent? I guess I'm missing that. So you ask, okay, I'm getting care from ABC.
Sharon, it doesn't matter what's spent because it's indemnity. I don't care. I don't care what's spent. If they spend $100 and I'm giving them $300, they get $300. If they spend $500, I'm giving them $300. They have to come out with $200 out of their pocket. It's indemnity.
Got it.
Yep.
Got it.
Anybody else have a question?
There was a few questions in the chat, but we can wait to your
Kelly,
yeah, I can't. I'm on a full screen, so I can't see it. Yes.
Kelly, so going back to what Sharon said, so you indicated that once you get the physician's statement, then Medico is then going to check with the client on claim to find out if they're in facility or not. Is that how it works? You figure that out by dealing with the client directly?
Well, we can either deal with the client directly or we can deal with the facility, one or the other. So the physician statement's going to tell us what type of care they need. So, for example, if you have someone that is had a stroke, they're probably going to go to a facility first and then come out and do home health care, right? So the physician statement's going to basically prescribe the facility. The facility is going to be named by the client, and then we are going to be checking with the facility. The facilities do all of that work for the client with the insurance company.
Okay.
But we're going to pay the indemnity dollar back to that client, unless, of course, they assign the benefits.
And if the client goes back home and is still going to have some in-home care, that would just be directly communicated from the facility to you, or does
Or the physician.
Oh, physician. Okay, great.
Yeah.
So there may be multiple physician statements.
Could be.
Okay, great.
Yep. So I'm just going to say this out loud. This sounds really very bad, but I can't take a client's word for it, right? Because if we take clients' words for it, then we could be paying claims on things that are not really inside of a qualifying event. So we do go back as an insurance company, and we are going to be checking with the facility or the doctor. Once the physician statement comes in, we now know who the physician is. So that physician we can stay in contact with as to how Kelly Rayburn is actually progressing with her care.
Makes sense. It's smart business for you to do it that way. All right. Do you want to continue to take questions? You want to continue in with your
let's keep going.
Okay.
So just to kind of give you an idea, we have really great discounts on households and on multi-policy. So currently with our plan, if one person applies that's living in the household that lives with someone over the age of 40, so Kelly applies for the plan, she lives in the house with John, her husband. John is not applying, is not interested in it. If Kelly's approved and she does accept the issuance of the Essential Care or Essential Care Plus, she's going to receive 7% off of her premiums just because she lives in the house with someone else over the age of 40. Okay, if John and Kelly both apply and are issued an Essential Care or an Essential Care Plus plan, now there's 14% off of their premiums. So they each have their own plan. It's 14% off each of their premiums. Now, if John turns 65, because he's older than Kelly, for sure. So if John turns 65 and all of a sudden he wants to get a Wellabe Medicare supplement along with his short-term care plan, he's now going to receive an additional 5% off of his short-term care premiums because he now has a second policy with Wellabe in the home. Kelly turns 65, same thing happens. So it's essentially 19% off of their premiums. Now, if Kelly's healthy and is issued an Essential Care or an Essential Care Plus plan, and John, not so healthy, he is not inside of a qualifying event, but can only qualify for the limited benefit rider, the two plans are combined and there is a 5% discount. So even though he's over the age of 40, he's on Kelly's plan, it's likely going to have some sort of effect on Kelly's health because she's probably going to be the one that's going to have to take care of him. It's a 5% discount if that limited benefit rider is added. Okay.
Kelly, any discount on the Med Sup if they're on a plan and now they turn 65? Do they get any discount on the Med Sup?
It does. The multi-policy does not work in reverse, Sharon, on the Med Sup, but our household discount on the Med Sup is living with someone else in the house over the age of 50, which is likely going to be the case. And that's 10% in most states, except for the new charter in Florida and the state of Washington.
That's the Med Sup you're talking about. Yeah. Okay.
Correct. Yep. So we kind of come in and try to say, hey, let's figure out how to get to know your client. You guys are super good at this. So I'm going to kind of breeze through these next few slides. So what does your client currently have in place? If you have clients that have long-term care or have been declined for long-term care due to their health, short-term care can be an alternative not only as a gap filler for their long-term care, or it can be an alternative for those that have been declined. Because remember, long-term care is very hard to get approved, right? You're giving all sorts of, you're going through, usually a nurse comes to visit them and they're taking their height and their weight and they're taking their blood pressure and they're taking their, sometimes their blood and they're having to pee in a cup and all these other kind of things. It's very difficult to get approved for long-term care. Short-term care, not so much, right? You've already learned that I have the uninsurable spouse. I only have one knockout question on my entire application, and it's, are you currently receiving care in home or in a facility due to a qualifying event? That's the only knockout question that I have. The rest of the 10 questions are designed for me to figure out exactly what type of plan that they can be approved for. So questions like, in the last 2 years, have you been diagnosed with heart disease or any sort of heart conditions, any kidney disease or any kidney conditions? The questions are designed to find out exactly what is in the background of their health. So while you're going through the questions with the client, I'm doing my MIB checks on the back end. So we're going to figure out what conditions are going to cause either them to be an essential care or an essential care plus, or if they are only going to be offered the limited benefit rider. It's going to tell you immediately. If you get to question 4 and they answer yes, the application is going to stop you. If you get to question 8 and you answer yes, and we find that that information is correct, the application is going to stop you and tell you what that they can be approved for. And then it's going to open up all of those options for them. So the application is very intuitive. It's going to help you design the right plan for your customer. So another thing, I know you guys are going to talk about life insurance here in a little bit. This is a great pair to those life insurance with hybrids or those annuities with hybrids. Why do I say that? You're not selling life insurance for the hybrid part of it. You're selling life insurance for the death benefit. right? Life insurance is designed for the death benefit. It's designed for after that person passes away to be able to clean up any debt or leave a legacy to the family. It's really not there or designed to be an alternative for if someone has to go into a facility or need some home health care. It just is an added perk. So this is a great opportunity to say, hey, look, you know what? I know we have this life insurance plan in place. I know we have living benefits on this plan. However, we have a short-term care plan that can actually be designed to not have to use the death benefit or deplete the death benefit because of you having a qualifying event. So it's a great cross-sell to those that are hybrid products. Another thing is family and friends. So I didn't have a lot of family, as I was already told you, I'm an only child, so my family is very small. So I didn't really sell into my family very much whenever I was going through my journey as an agent, but I did sell to quite a my friends. Most of my friends were in the same situation that I was. I was a single parent. So I built my business on the niche of single parent professionals. So they always gave me the next person that they knew that was another single parent. I was always asking for that referral. So the best thing to do would be to use the people that you know in the market and say, hey, look, I understand your mom, is in a nursing home. What is your plan? Now that you see what your mother's going through and you're finding stress about this, what is your plan? Let's get something in place for you so that you don't do this to your children. And then, of course, using the local resources, using charities that are out in the market as a source of getting to know people. So be charitable, go out and serve, and then you're going to use those local resources once they start getting used to the fact that you are there as a volunteer and you are committed to that particular charity or that particular organization. You're going to find that that's ends up being a great referral source for you. So again, I started off this whole thing with my mom and dad are not coming to my house. So what is the plan for you if you find yourself in a situation, right? That's the number one question. If you have a qualifying event, if you can't do 2 of the 6 activities of daily living, who's going to take care of you? What's your plan? What do you want your plan to be? Well, my family's going to take care of me. And then I'm like, the next question is, do they know that? So and then what is the plan? Of course, we've done all of our research in the market before we ever brought out this plan to know that people want to age in place. That is their number one thing that they want to do is they want to age in place. So what is the plan if you age in place and then need to transfer to a facility? So that is your home health care and then talking to them about getting into that facility rider. Then we always say, hey, provide quotes for your clients. And I'm sure you guys are already doing this, right? You can go to our My Enroller. You can go in and try, you can actually go in, print quotes off of My Enroller, save quotes in PDFs, send them to your prospects from the My Enroller. It's a very intuitive tool. But the best thing to do is to use the numbers, right? Use the numbers to your advantage and then look at how the benefit periods, what those numbers say in your area, and then try quoting a low, medium, and high. So instead of looking at all of the different benefit periods that are available to them, try quoting in the 90, the 180, and the 360. At least then it gives you a good benchmark to say, okay, if we have some home health care and then some facility care, this is what the quote would look like. If we have a middle of the road, a medium quote of 180 and 180, here's what it would look like. And then here's the full enchilada. So be prepared. I always say print them on 80-pound paper because they look really professional. 80-pound paper is card stock. And then just slip them in a folder so that you have them whenever you're walking into a home or talking to maybe a director of a nursing facility or whomever. Same thing with the facility, doing the same sort of baseline quoting at that 90, 180, and 360. Finding out what I like to use, one of the things that I used as far as a resource tool was a care calculator. So I would go out to Google, I would pull up a care calculator for the area, or I'd find out maybe what the facility of choice is inside of that zip code, and I would use the care calculator off of that facility to help build my quote. And then, of course, My Enroller is there for you to use. We also have the quickquote.myenroller.com. If you're not currently appointed to Medico, you can actually go to quickquote.myenroller.com and you can run quotes. You can't print from there or any of that kind of stuff, but at least you can see what our prices are. And then for those of you that are appointed with us currently, your agent portal is either mic.gomedico.com or you can use wellabe.com/sign in. That's where you can get client materials, you can get agent trainings, you can get education materials. We've written a whole bunch of articles. We've put out what is STC versus LTC. We've put out STC 101. We've put out short-term care for marketers. So it gives you some talking points as you're going out into the field. And then Andy, you may want to check with Andy Dasher. He actually put together a co-op lead program with us. It is a lead program that is designed to go to your current client base, not a lead program to send out to anyone, but it's designed for you to be able to download your current client base, send them a postcard. So let's say you have a MedSup book or Medicare book that has, 200 clients. You can send to those 200 clients, say, hey, look, hey, this is Sharon. Haven't talked to you for a while. Here's a postcard about Wellabe's short-term care. And then if they don't call you, Sharon, then you can call them and say, hey, I sent you a postcard. I would like to sit down and talk to you about that postcard, as well as just reviewing the rest of the insurance that you have to make sure that it's making sense for you now. Cross-selling ideas with the rest of our portfolio through Medico. And then consumer resources, we also have a ton of agent materials, but we have a bunch of consumer resources. They can get either on the customer portal, there's a bunch of resources there, or they can download the Be Well app and they can get all of their ID cards within 24 hours of their approval. They can check their plan details. Everything is right there at their fingertips. And I know a lot of people say, my clients aren't really big on technology. COVID told us that that's not true. COVID showed us that they know how to shoot a QR code. They know how to use Facebook Live and FaceTime and all of that stuff. They know exactly what to do with an app. So this is a great resource. It also keeps you as their agent in front of them. So if they have the Be Well app on the phone, one touch call to the agent inside of the Be Well app. So you as the agent of record are also listed in there. That number right there is our agent support line. But Mark put my cell phone number on that first sheet that he showed you. I'm going to come off of that. So if you need to get a hold of me, Mark gave you my cell phone number. You are welcome to call me there. I will tell you that if you text me, it's going to be faster than if you call me to get a reply back. Because I am on a plane, I am on the road, I am doing a lot, and as Mark had mentioned. So I can usually answer a text even when I am in the sky. So definitely send me a text with any questions, comments, concerns that you might have. I'm here to help. I want to make you guys successful.
Okay, so you can see Kelly's phone number right there. And that's very kind of you, Kelly. I should have asked you first, can I give your mobile number out? But that's the only number I had. So thank you
Totally
for
fine.
allowing that. But that's what I mean, guys. Kelly goes the extra mile constantly. And frankly, I just learned a bunch of new things, as I'm sure most of you did. I'm positive, Kelly, that we could probably benefit from having you back, not in the not too distant future, to maybe do a webinar around best ways to navigate the portal and all the ways to, because again, being able to get a discount on supplemental products or additional products that you add to the portfolio, the flexibility of the whole Wellabe portfolio, it just makes too much darn sense not to have this be a higher product in your portfolio that you think of and go to when you're trying to help somebody solve this issue. So we thank you for this, Kelly, very, very much. Anybody else have any questions for Kelly?
So I see one in the chat that I'm just going to address. It looks like I pretty much addressed them, the rest of them that are in here, unless I missed one. But Monica, you had asked any word on the product being available in South Carolina. Great question. South Carolina is approved. We are going through a 4-product launch prior to Halloween this year. So currently we have new Med Sup that's going to be launched in the market prior to this AEP. And then we also have another insurance company under the Wellabe brand called the Great Western Insurance Company, and they have a pre-funeral planning product that is being launched as well. So they have a dual product. So as soon as we get that product out the door, we're going to take all of the states that we have approved and we're going to build those into a launch. And South Carolina is one of them for STC. So just hold on to your pants,
yay.
lady. I know. I'm excited too.
Yay.
So just hang on to it. Just buckle up, because whenever we get there, I'm going to see your name on a leaderboard in South Carolina.
You gotta love Kelly.
Yeah, I have a
Buckle up.
huge block of business that we could do a mailing to.
Yeah, I would love
That'd be
to.
great.
It'd be, yeah, it would be great. So
Great.
Buckle
Thank
up,
you.
get the full enchilada. Your ability to talk in these metaphors is very good. Interesting. All right, so we'll set something up in the not too distant future so that everybody can benefit, because I just get the sense there's a lot to be gained here by working closer with Wellabe, not the least of which is the fact that they're willing to help you reach out to your existing client base and open the door for additional discussions on ways that you can help.
Yep.
Again, nobody pays more for facility care in the short-term care space or the extended care space than the Wellabe product at $500 a day. So lots of positive things to be looking at here. All right. You have her information, you have her email address, you have all the ways to get in touch with her. As I said, Kelly, we think this is the beginnings of a great working relationship. I hope everybody takes advantage of the fact that they're willing to help you reach out to your clients and talk about this product. I know that Andy's thinking that this is a great way for us to also build the agency, because again, you can only be mailing to your book of business so often, but if you go out and recruit new people and tell them they can automatically get a mailer subsidized by Wellabe to reach out to their clients about this, it should bring in some new blood, and that would hopefully help rise all the agents to be better because of that. So, Kelly, we look forward to working with you.
well, thank you. You guys have a good day. Enjoy the rest of your meeting.
You take care. Thanks.
Bye.
Bye-bye.
Thank you.
Okay, we're going to move on to our next guest. Our speaker, he's not really a guest, he's part of the family, but he's here every month for us. But this month is different. I'm sharing, you're still seeing Kelly's slide, right? So it's Kelly.
Now we see everyone.
Now you see everyone. Let me go back to sharing the slides with you.
Now we see
Okay.
placement.
Okay, they're seeing my slide, Mark.
You seeing the
Now we
slide? Did you
see
share
Kelly.
it?
Now
No,
we see
We're
Kelly.
back to
Did you
Kelly's
see-
slide.
Yeah, okay. Now, did you share your slides? I can go to your slide too, if it's there. Claude.
I think I shared. It said I was sharing.
Okay, well, let me stop sharing for a second and then see what happens right
Well,
now.
let me try again. I think it got taken away.
All right,
Okay.
there you are.
All right,
There's
now
your
do you see
slides.
my slide?
There we are.
All right. So everybody knows Claude by now. He's a regular fixture on it. We have Claude's Corner at the first Friday of every month. But last week we did Claude brought to us the gentleman from Lincoln Money Guard. So we postponed his Claude's Corner to this, but instead Claude and I decided to change this into a separate webinar because of some of the things that Claude discovered when taking a deeper dive into your business and some of the great skill sets many of you have. Oh, by the way, before I go any further, I did solve the Hank Ellis situation. Hank is also known as Franklin, but he really is a real person to himself. I don't know how I got the perception he was someone else, but Hank, we want to thank you for your steady submission of businesses as well. All right, Mr. Claude, why don't you tell everybody
All
what
right,
you
so-
discovered?
So, Mark, I think we should probably limit ourselves to about 15 minutes because it's getting near the hour. So we'll see how far we get.
Yeah, see how far we
I
go, and we
developed
can get you on.
I developed a
Let's just go for
presentation
it.
with
Okay.
and cut it down to half the slides, but we're not even going to be able to do that. So we can continue later. So, the issue is how to improve placement. And there are ways to do it, as this demonstrates, as Mark mentioned earlier. The business that's come through Mark to back nine has a placement rate of 82% of the apps, 86% of the production credit. So the bigger cases are being placed even more effectively than the average case. The rest of NIAS.
Just a point of thing, Claude, real quick. When that says Mark Goldberg, that doesn't mean Mark. That means all of you. That just means through this channel. That's what's happened. I don't want you to think that this is more of a salute to all of you for your and the reason for that, just so we can talk about this for a second, Claude, is that because you have a background as field underwriters in the extended care and side, you're that much better in uncovering the health issues than, let's say, just a Medicare only agent. I don't want to say anything disparaging about Medicare only agents, but the truth is they don't ask as many health questions as you do as long-term care and extended care agents. So that's one of the reasons why this has all come to light. Sorry, Claude, go ahead.
Yeah, totally right. So you can see that the other NAIS brokers have a way lower percentage on their case number. And interestingly, they have a lower percentage, which is typical of the industry, on production credit than they do on case account, because when you do production credit, the premiums are higher at the higher ages, and the placement rate is lower at the higher ages. So you can see how outstanding the production is from the advisors who have been working and submitting cases through Mark. So one of the questions is, why is that the case? And Mark has been already telling us that. So a little bit. So why do they get higher placement ratios? And, basically, what can other NAIS brokers aspire to? So you can, if you've been having a low placement ratio, well, you can see it can be accomplished to have a stellar ratio. So I was going to throw this open to ideas for comments. I do have, if I go through my slide, I can suggest some areas very quickly. Mark, should we open it up for some discussion, or would you rather?
You can open it up for discussion and go through your ideas. Don't let the clock stop you. Go for it.
So unmute and, suggest ideas. Mark mentioned that you ask more health questions. I think that's one of the aspects. What else is it that you do? Or what else is it that you think you can do? What works for people? Why do you find some cases place and others don't? What can you do to emphasize better placement?
Anybody have any theories as to why you think we're considerably better at this than the rest of the agency at large?
Writing departments, folks.
Probably because most of us have a lot of experience.
Yeah, that's probably right. What was that, Walter? So Walter was saying something too, Monica. 1 second.
We speak to underwriters. We call companies and talk to underwriters about cases.
Developing a relationship with those underwriters. Okay.
Yeah. So then, and exactly. So it's not just asking the questions, as Walter says. It's what you do with the information once you have it. You pre-qualify it, and you by accessing underwriting guides and/or by submitting electronic pre-qualifications, calling in, and you find out from the various carriers which one's most likely to accept this case, so that you can send it to the right company the first time. Absolutely. Anything else?
That comes back to what Monica says, Claude, that because you guys in general have more experience, you develop those relationships with the underwriters and the other key people within these companies, and thus you can go that extra mile to, uncover what it is or what it's going to take to get people appointed. I can share with you that I know a bunch of you get appeal cases that go through back nine and are able to win those appeals with a pretty good frequency, as long as you can get the doctor to share additional information or new information that wasn't originally available when they did the underwriting. You can overturn those decisions, and many of our agents have done that, and with a lot of success, all because of their relationships with the people they have at these different carriers. So anyway,
Yeah, that's true. Having the relationships is valuable, but we push hard for appeals where appropriate. And I just want to encourage you, if you're relatively new, you don't have the relationship. The real key is collecting the data, and then you can pre-qualify. You don't need any relationship to pre-qualify your client with the carriers, and we have a variety of ways you can do it. So here's some ways you can improve placement. First one is one that hasn't been mentioned, and that is to quote more conservatively. What really, one thing that contributes substantially to cases not being placed is that the person was quoted at a preferred risk, a super preferred risk, and they have a history of cancer, they have a history of this, and there's no way they're going to get that rating. And when they come back and they get a higher price than what they expected to get, they feel mistreated, they're dissatisfied, it's disappointing, and they don't take the case. If you quoted them that higher price originally, they would most likely take the case. So, really encourage you to quote conservatively. On the long-term care insurance side, I almost never quote a preferred rate. It just generally not necessary. If you're in competition, it may be necessary, but generally not necessary. So quoting more conservatively works. Do better pre-qualification, and that has two steps, which you guys mentioned. One is asking the questions, and then, as Walter said, it's contacting the carriers in order to get determine which carrier is going to be best. We find sometimes over our careers, we probably all experience this. You find out something and you say, oh gosh, now I know we should have applied to this other carrier that somehow failed to get that information. And you'll get clients that'll tell you, yeah, I don't want to go through that process again. Make it easy for them, do the pre-qualification. So we have 3 really good ways to do pre-qualification. Some of you have used this. We have a direct to the insurer capability for life insurance. You put the information into the system. Today we're a little cramped for time. I won't show this unless you want me to, but you put the information into the system, you hit a button and it goes out to, 18, 20, whatever number of carriers would offer what you're asking for. And then you get responses from them. It is so sweet. You think somebody's uninsurable, and all of a sudden one carrier comes back and tells them they'll consider them. Or you find out that, you can prove to your client that they're uninsurable. They may question that, but you can prove it to them because you've gone out to all of these companies who have said they can't be issued. Regardless of the answer you get, it's tremendously valuable to do that. For long-term care insurance with us, be NGL or Thrivent that you do through us, I have a link you can send to your client so that they can fill out a questionnaire, electronic link. It comes back solely to me. I can obviously share it with you. Some of the advisors I work with don't want to know. They'd rather not know the health conditions and just have me identify what rating classification would be. But they can send that straight back to me, and then I will either identify what the rating classification will be, or I will pre-qualify with the companies myself, or you can. There's a lot of ways we can do that. And then thirdly, if it's disability income, we have a request a quote process, and as you request a quote, you can send the health profile, and our DI expert Monty Tarnall will either do the underwriting or pre-qualify with the carriers as appropriate. So these steps right there, quoting more conservatively and doing better pre-qualification, I would right there would makes a significant, very significant difference. One of the things that's really unique and unusual about quote and apply is that on quote and apply, when you quote a carrier and you look in the blue area where the details are, you can access the underwriting guide. So you can look up that carrier's underwriting guide. You're online with your client and they say they had this stent put in 3 years ago. You can pull down the underwriting guide and right away see whether that is an acceptable condition or not. And if so, what rating classification you should quote, and you can, right away change the rating classification if necessary. I think one of the key things that you can do is sell to healthier people. And I think that's, particularly true for those of you who have a Medicare block. Your block is older, and there's ways that you can use your clientele to sell to healthier people. For example, with your Medicare clients, you can access their children and their grandchildren and nieces and nephews, send out, hey, I got this great website. People can look for coverage on their own. And, if you encourage your relatives to do that, you've been satisfied with my service, happy with my service. I stand behind that. If they have any question at any time, they can text me ask me a question, schedule a meeting with me or whatever. So if you can get your Medicare clients to refer your quote and apply link to their younger relatives, you're going to be selling to healthier people and you're going to be getting a higher placement ratio on that basis. Okay.
Healthier people.
Then
I was just going to make the point real
Mark.
quick, Claude, that healthier people tend to hang with healthier people. So getting referrals from your clients is always a better way to be talking to people who can not only qualify health-wise, also be probably more qualified financially. So this is the time, right before open enrollment period. You need to be getting all this stuff together. Go ahead, Claude.
Another one that I actually have later here that could have been here is, people. I'm always amazed at how little advisors sell to their professional advisors, sell to their doctors, their dentists, their attorneys, their accountants, and their restaurant owners and their dry cleaning shop owners. So many people in your community, and you can't perfectly be sure about their health, but you've got some idea as to the health. And so another item that we're going to explore a little further here that Andy Daster was really promoting as well is selling products that have higher placement ratios. So I'll take a little bit of a look through here, and products that have higher placement ratios going to be Gerber's final expense product on our system. Banner among the term policies, quite interesting in that regard. And of course, annuities, right? On most annuities, there's no underwriting at all. So with no underwriting, you're going to have a very high placement ratio, faster turnaround and such like that. So this is your placed business at NAIS, at not just yours, all of NAIS for the past 12 months, based on the number of apps. And you can see that 18 apps came in on Gerber and 17 were placed, right? 94% placement ratio. That's amazing.
It is amazing.
11, it's not amazingly surprising, but it's an amazing percentage, and it's because of the nature of that sale. On Banner, you had 11 apps and 9 were placed, 82% on term insurance. That's really amazing. As an actuary, I will say that's not a huge sample, but that's really good. And so striking compared to all the other apps, which are mostly other term apps. And on that, there was 37%. And that's pretty significant. That's on 83 apps. That's a significant number. So I decided to look at all of back 9 because the Banner, you only had 11. I wasn't sure how statistically significant that is. And you can see on Gerber, all of back 9 had 81% replacement. You had 94. That you did an excellent job, maybe a little bit of luck, but hey, 81% placement, and that's outstanding, right? With Banner, we only had 61% instead of your 82. So, expect 82% is probably an unreasonable expectation, although you did achieve it in the last 12 months. But you can see, even for us, the difference between Banner and the other term isn't as stark, but this is really statistically significant. We've got 7,600 apps here between Banner and other term insurance, and you can see a 61% placement rate with Banner versus a 46% placement rate with others. So Banner is very competitive. I have some slides on Banner, but I hid them for right now because we don't have a lot of time. Mark and I will schedule another time and we can talk more about Banner. You can see Banner is a good place to go to. So one thing to do is to sell a lot of final expense. Final expense closes, right? And that's really appropriate, not only for your clients, your Medicare clients, but again, as Mark said, get referrals from your clients. Yeah, your clients know people that would be interested in final expense. I think that's very clear, regardless of what market you're in, but particularly if you're in a Medicare market. So if you go to burial expenses or final expense in quote and apply, you will see Mutual of Omaha and Gerber. Mutual of Omaha has some underwriting. Gerber is guaranteed issue. If you go to, I can't qualify for life insurance or guarantee issue, you go only to Gerber. So you want to you may want to select your pathway depending upon whether you think your client has any opportunity of passing some health questions or is willing to engage in a more complicated sale. Some just want the simplified sale. So you can either just show Gerber, or you can show Gerber and Mutual of Omaha. When you return to burial expenses, if you go to guarantee issue and then you return to burial expenses, it typically only shows Gerber, but you can then usually go to life insurance and come back. So here's the selection screen. So you can see this is the burial expenses, the final expense. This will, at least when you come on fresh, this will show you Mutual of Omaha and Gerber. And this one on the lower right-hand corner, I can't qualify guarantee issue, will only show you Gerber. So one of the things I wanted to show you is how to quickly maneuver and test something in the system. Can you see my boss screen?
You can see
now?
it. It's not very large, but
Yeah,
we can see it.
So okay. So when you see it, and when you're in boss, in the left menu, there's quoting here. And when you go to quoting, you can do quoting e-apps. And I have a case out there that I keep out there, Jane Doe. And so if I want to do something really quickly, I just click on Jane Doe. You can find any existing one. If you've ever done a quote on somebody, you can find it here. And then you can click continue, so you don't have to continue, put all their information in fresh. And I do that. And bingo, this takes me to where I was most recently on that quote. So this gives you an example of how you can see Gerber and Mutual of Omaha together. And you can see Mutual of Omaha is a lot less expensive because it has underwriting. And I've got some slides I've suppressed here today to explain, the underwriting with Mutual of Omaha. We can discuss that at another time, but you can give your client an option if they can. This describes the difference in the products. Mutual of Omaha has, 2 phases, a limited first 2 years, but even that has 4 underwriting questions and such like that. We don't have to spend a lot of time on that. But here's the key. I looked at a $20,000 policy because I had comparable data for all of them here. This is females aged 50, 60, 70, and 80. I've got the Mutual of Omaha price, which you can see is a lot less than the Gerber. That's because this has underwriting. Gerber does not. I've got the Colonial Penn price. Everybody hears about Colonial Penn. Well, look at the Gerber compared to Colonial Penn. $68 instead of $100, $101 instead of $131. $150 instead of $199. I didn't have the Colonial price at 80. So we're a lot better deal for the client than Colonial Pen. There is a lot of Colonial Pen being sold out there. People are responding to their ads so much. Your clients are buying Colonial Pen and you can offer them a better deal. I also picked up the AARP prices. AARP is much more competitive than Colonial Pen, but Gerber is lower than AARP at ages 50, 60, and 70. 80 is the highest age Gerber will issue. At 80, AARP is a better deal. These are the female prices. The same pattern is true. Now I've just flipped to the male prices, and the same pattern is true. The Gerber is a lot cheaper than Colonial Pen, and it's cheaper than AARP, except at issue age 80 on these ages. Somewhere between 70 and 80, the AARP gets to be a better price. So you've got something wonderful that you can offer, and you've got a wonderful technique and system for doing so. So no reason not to do that. And then I also wanted to show you on link benefit. There's a real nice price war going on link benefit right now. I was just working on a case where a mother has a family trust and she wants to do single premium policies on 7 children. You're only seeing 6 rates listed here because I have 2 female 65 twins. No sense showing the same rate twice. But some of these are married, some of these weren't. Only 2 only 2 of these were married, or 1 of these. So you can see, Nationwide was the most competitive in the country last year. Love the Nationwide product. Lincoln National came out with rates to beat them this year, and they focused on the more robust designs. Their 3-year benefit period without extension of benefits to your didn't change their rates. So if you can get a shorter benefit period, it's going to be more expensive than a longer benefit period, and it's really crazy. They weren't trying to get more into the age 70 and above market. It was more below 70. So you can see for the 70-year-old, NGL Lincoln, is still $21,000, $21,000 more expensive than Nationwide. But at these other ages, you can see it gets to be, in some cases, remarkably less expensive than Nationwide. Bright House came out with a new product, and we heard from Lincoln last week, as Mark said. Bright House came out with a new product a week and a half ago, and they have lower prices. Now, a couple of things here. Lincoln has no elimination period. Bright House has a 90-day elimination period. Bright House and Nationwide have higher prices for smokers. Lincoln does not. So if you've got a smoker, that Lincoln is really, can I say smoking? Smoking hot for a smoker. Bright House won't issue anything longer than a 5-year pay. Lincoln won't issue anything longer than a 10-year pay.
Okay,
Mark?
so yeah, that's first of all, good stuff, Claude. We will continue this because it is more than an hour, but there's so much stuff here. However, the message should be clear to everyone at this point. If you haven't already set up a time to go on a tour of the back 9 tools and resources that they make available for you, do so as soon as possible. I'm going to go back to my slide with Claude. You'll see there's a phone number and an email address, and you can set all this stuff up with them. But if you don't do that, there it is. You're missing out on a great advantage you have in the marketplace because you have back 9 in your corner, and you have the mind of Claude Thau in your corner. And that, again, I can't overstate how that is such an important differentiator in the field. Anybody that's worked with him will tell you that Claude can make all the difference in having you stand out in your relationships with your clients. So, Claude, let's continue this and to go down this path. There's a lot to be obviously learned from it. Most people have hung in with us. So, anybody have any questions specifically on what Claude asked or what Claude shared with you just now?
Yeah, is the smoking of Lincoln Money Guard, does that include marijuana?
Are you looking for a source?
I'd have to check. It probably may depend on jurisdiction and usage, how much usage and for what reasons and stuff like that. The carriers are around about that. But again, if you have, for example, if you have a marijuana user, why not put that into our, because sometimes carriers underwriting positions can change and we may not be aware of it. Put their profile into our pre-qualification system and hit send. And we can get it out to the various carriers quickly and have them come back and tell you whether they're interested in your specific client.
And again, all this is the kind of stuff that you can get into the intricacies of a specific case with the help of someone like Claude. When you bring him in to consult on what you're doing, it makes a huge difference. Okay, I want to share, I hope I'm sharing this slide with you because I want to move this on because I want to make sure that we get to this next part. This is about free leads for all of those of you that hung in there. I want to make sure that you get access to the leads. So can you see this slide now with the states listed on them? I have leads from some lead programs that have been recently done. These are all fresh leads in these states. I mentioned them to you last week. I only had one person take me up on getting those leads from those states. You see the state of Washington there because there's multiple leads. That's the reason why it's there twice. I can no longer take the chance that someone's going to raise their hand. So let's get these leads assigned right now. First come, first serve. Speak up. Tell me who wants a lead from any of these particular states, and I'll make sure I send it to you shortly after this call is over.
I'll take Michigan.
That's
Scott
Michigan.
here.
That's Scott gets Michigan. See, speak up first and you get it. Okay, next.
For the week of July 27th.
Walt.
Hi, Walt. Go ahead.
Utah.
Walt gets Utah. That's what I need to know is what happens with these leads when you do them, because we have that when you work them, because we have the ability to get many more leads if we can show that we can convert some of these.
What kind of leads are they? I mean,
These are extended care leads that came from some recent campaigns that came in after we stopped those campaigns, and they're waiting to be worked. They inquired in the last 2 weeks.
If nobody else wants them, I mean, I'm licensed in a bunch of other states: Alabama, New Mexico, Oklahoma, Mississippi, Minnesota.
So everybody speak up. Now's the time. What other state do you want there, Scott? Do you want?
Alabama's fine.
Okay, you got it. Now let me see if anybody else is going to speak up before you get them all. Anybody else want any of these leads? Going once, twice? How come? How come you don't want free leads like this? You don't have to split the case.
I got all these states except Utah and Idaho.
Okay. Well, again, you don't have to split commissions. You don't have to give up a percentage. You don't have to buy the lead.
Whoever doesn't want to take them, send them my way.
Okay. Well, anybody in New Mexico?
I got New Mexico.
You do. Okay. Raymond Levine, you still on? You don't want Washington? I'm surprised. That.
Yeah, Washington also.
Yeah, I know. I'm surprised. All right. Well, then that's
who's available in Washington as far as the carrier.
Most carriers are available in Washington. I mean, not all the carriers, but most of them.
Not for the short term.
Oh, for the short-term carry, no, but it doesn't have to be short-term. This is just an open the door and figure out what how you can help the person.
Yeah, the only ones I don't have is Utah and Idaho. All the other states I have.
Utah and Idaho. All right. Well, I'm again, I don't know what more I can do to help you write business than give you free leads, and I find it just a little bit disturbing that when you're offered it, not more people are taking advantage of it. So I'll leave that between you and me personally, so you can let me know what it is we can do to help you get more leads. All right, and Scott, you'll get those leads from those states if nobody else spoke up. So look for an email from me. And Walter, you too. You'll get the leads. All right. Anybody have any observations from the field before we bring the call to an end? Anything that happened to you last week that you want to share? Guys, I know this is sort of like, the prologue before all the excitement begins. But getting prepared now, taking advantage of the Wellabe willingness to mail to all your clients at their expense, taking advantage of all these other plans and programs. All I can do is bring you opportunities. It's up to you to seize upon them and make stuff happen and to get ahead of the curve by doing it now instead of waiting until open enrollment season is on us. Nobody has anything to share? I'm going to share this with you. I know we're way over time, but I'm going to share this with you anyway because I don't know how much more relevant it's going to be. All right. I have, many of you know that I've been sick lately. I've been in the hospital a lot. And as a result of being in the hospital a lot, I get to watch the Olympics. So I figure that the Olympics have been were specifically planned for me, so they gave me something to do while sitting in the hospital. And I couldn't help but notice, watching the Olympics, why it is these people excel like they do. This is only 3 slides, but it applies directly to each and every one of you. Again, I started to mention this last week. Success is not doing something big or spectacular. It's doing the little things in an extraordinary way. You hear it all the time from these athletes when they qualify, when they win a gold medal or they win a bronze medal or a silver medal. They talk about what went into it, and it's never some super thing that they discovered that made them so much better than everybody else. It's that they fixated on the little details that allowed them to just be that much better. I mean, how many times are we seeing these races where the top 5 are within 1/10 of a second or of each other qualifying? I mean, how frustrating that must be to those who just miss getting a medal by that time. But I don't know how many of you saw yesterday's basketball game, but there was a perfect example. Here is the dominant U.S. basketball team. No way is anybody supposed to give them any competition, and they find themselves down 17 points in the third quarter of that game, and they come back and win the game because Steph Curry and Kevin Durant and LeBron James step up and do what's necessary to get them over that hump and past Serbia. They had beaten Serbia easily, but then they let their guard down, and like that, they came real close to no longer being a gold contender. Well, that changed, and they'll be on Saturday afternoon. They'll be competing for the gold team, and you can go to the bank that the American team's going to win, as it always should when it comes to basketball. We are a superior country compared to everybody else in basketball. But you got to acknowledge that, yes, these people are very talented. There's no doubt. They worked very hard at it. I don't know how they get past 3 years of practicing to get there, and then a little thing gets in the way and can make all the difference. It's got to be as frustrating as can be when that happens. But at the same time, these people have developed habits that lead to their high level of success. And it's not because they're so much better than you in any way. They suffer through the same exact things you do. You listen to them when they talk afterwards, when they talk about how they had to prepare and what they have all the same doubts. They're constantly, they tell themselves they're no good. They tell themselves that they were a fluke. It was the fact that they got the attention that they originally got must have been an oversight, because they never were as good as their headlines suggested they were. And all of that is nothing. All of that is not true to any extent It's all a way that it impacts their self-confidence. And all of that is true for you. You know you're the real deal. You know you put in the time and effort to learn the products. You know that if you haven't, you can, and you know what you have the resources to do it. It's just making up your mind that you are going to do it. You're going to separate yourself from the pack by going that extra mile to make sure you're on top of your business in a way that when people do business with you, it's a true advantage to them that they found you to help them solve this problem. And again, the highest paid people in these different is not because they're 100 times smarter or 50 times more ambitious or do their work 20 times more than you do. It's because they focus on the little things and what they can improve on. And I can't tell you how much of a difference that makes when you approach your practice and how that separates you, because everybody out there is dealing with this same self-doubt and all the other conditions that you're dealing with. It's how you respond to that that makes all the difference, and you have control over that. So you want to be a gold medal winner, and all of you do have the capability to do that. You got to take care of those little things, and it will reflect itself in not only in your paychecks, but in being a higher achiever, in being sought out and seen as someone who's exceptional. It'll come it'll come to you because you paid attention to those details, and that's what separates the people you're seeing competing on those in those different sports. That will separate them or you from the rest of the pack. All right. Now's the time to take inventory of your opportunities. Again, that's the only business I find myself in, is trying to find you opportunities. But I can't take advantage of them if you're not going to seize upon that moment. Right. And that's how you become part of the 1%. You seize upon the moments and opportunities that come, win or lose. You learn something from it, and you go on and you become known as a difference maker, and you make a difference in all the lives that you touch. So just something, it's so apropos to the Olympics. I didn't want to miss talking about this while the Olympics were on. All right. Anybody have any questions about anything else that we covered? There is no call next week as of right now. If something major comes up, I'll have a call. If you want to send me suggestions for an interview or for a topic for one of our Friday calls, I'll be glad to incorporate them. We will go back to a regular history of every Friday calls come September 6th, I think it is, or September 6th is a Friday that we'll go back to regular calls, but I will still stay in touch with you throughout the week by sending you carrier updates and other breaking news. Make sure you take a look at those things. But don't just give this time away. Go out and help as many people as you can. Interview as many people to what their issues and challenges are, and make the most of it, because you'll have momentum going into the fall selling season. And again, fall selling season is always the best time of the year to be writing our business, especially the month of October, because it's a 5-week month. But September and October, all the way up to Thanksgiving, is a great time to write a whole lot of business. And there's no reason to give any of that time away. Start doing it. Start running your process and procedures now. Questions? Okay, thanks for hanging in there. You saw the list. If you want leads from any of those states, let me know. Otherwise, I'm sending them to Walter and to Scott. Thank you, everyone. Bye.